Well, Bloxham Stockbrokers chief economist Alan McQuaid is also in Dublin. Well, Greece has seen its debt load reduced, Mr. McQuaid, but is there now room for Ireland to improve the terms of its own bailout, do you think?
Well, I think it's clear that the government doesn't want to pursue the route of defaulting on government debt, but it's hoping to get a better deal on its bank bailout. It's put 63 billion into the banks, and I think what the Taoiseach is hoping to do is try and restructure, refinancing deal on terms of particularly in terms of promissory notes related to Anglo-Irish Bank. If they can do that, I think that gives us a better chance to move forward. But I think the Taoiseach and the Minister of Finance have said that it wasn't an issue at last night's or Thursday's summit, so it'll be an ongoing thing. But I mean, I think we're in a strong position. I think the economy has performed well. We've been put forward as a poster boy now of fiscal austerity and reform. So I think that we can, if we come unstuck, we can certainly ask for more help to get things going again.
And in terms of the bank bailouts that you saw, it was interesting that a way of helping relieve some of the contributions from the taxpayer was by forcing some of the junior bondholders of the riskiest debt to take some of the pain, to take some of the losses. Do you think that's something that other countries now could follow? Now we've got bank recapitalisations happening across Europe.
Well, I think Ireland was ahead of the posse in terms of bank bailouts, so I think it's possible that other countries will follow suit. But I mean, I think we're only interested in our own position now. We've got to try and strengthen our own hand. And I mean, we've certainly reduced growth in the first half of the year, unlike Greece and Portugal. And if we can, keep that growth going, there's no reason why, bond yields won't continue to fall in the coming months.
Yes, certainly we have seen bond yields fall. They've fallen, in fact, for Ireland by about a half since July. How has Ireland really managed to set itself apart from the likes of Greece and Portugal, do you think?
Well, I mean, the figures for 2010 showed Ireland with a balance of payments current account surplus. First time we've had that since 1999. We've also got obviously the better deal that was negotiated in July in terms of making savings and debt interest payments. Our export model is really dynamic. I mean, our exports account for over 100% of GDP. With a record, highest ever trade surplus in June. Tax receipts have picked up in the last 3 months. FDI is very strong. I think in the first half of the year, we had 28 companies investing in Ireland for the first time. And I think the really key factor, which you cannot underestimate, is the overseas sort of investment in Bank of Ireland at the end of July. I think that that investment, which kept the bank out of full state ownership, was a huge sort of fill-up to the economy and to the reception of Ireland abroad.
So you've had clearly some strong export business, as you mentioned. How about the consumers? Because that has been a relatively weak point for Ireland.
Yeah, it's very much a two-tier economy. Exports performing very well. Consumers, unfortunately, underwater. We had figures this morning on retail sales. Still very, very, very weak. And it's hard to see that changing anytime soon. Unemployment is over 14%. And with the prospect of further fiscal austerity in the forthcoming budget, I think consumers are going to be, underwater for some time to come.
Alan McQuaid, thank you very much for your time. The Bloxham Stockbrokers chief economist for us.